So, will we see pound selling out of the Bank of England expected rate hike today? Well, that's what the seasonal bias says from historical event perspective. You can see here, looking at the Bank of England rate hike, whenever the Bank of England's hiked rates over the last 23 years, the pound US dollar pair, you can see it's lost value into the event. And then on the next couple of days after the event, the pound has continued to show a bias towards weakness before picking up over the next 7 days and eclipsing, pre-seasonal biases before the event. So typically this makes sense because markets know when a rate hike is coming, which is why it makes sense to see the pound selling off on the decision. It's a clear buy the rumour, sell the fact response. However, it is interesting, isn't it, to see the way the pound has recovered on a seasonal bias over the next couple of days after, you get a couple of days downside and then, a week of buying pretty much. So can this provide a strategy for today's Bank of England meeting? Markets are pricing in a 86% chance of a 50 basis point rate hike. You can see here to go up from 3.5 up to 4%. Major trade risks. The major trade risk here, of course, is that the seasonal bias around events doesn't play out again this year. Remember, HYCM clients can access the SeasonX product in order to analyse over 25,000 different currency pairs, indices, commodities, as well as individual stocks. Please do contact your account manager for a free trial and get started right away. Certain products and services mentioned herein may or may not be available to all clients, depending on which HYCM Capital Markets Group entity their trading account adheres to.